You own about 50,000 ringgit in crypto, markets are suddenly green again, and your portfolio is making hella money. You'd like to cash out and start spending or move from this asset to other forms of investment assets like property or maybe stocks. But LHDN is watching you, making sure that you do not run away from taxes from afar. Now, especially if you're profiting a lot. I know, it is very unfair. The profits that you made are now being taken away by them, the LHDN, to develop the country. That was a joke. But in Malaysia, not all kinds of capital gains are taxable, especially in stocks and shares. And thank God it is not taxable, and hopefully it stays that way. But what if a superhero with a big afro comes into your vision and just starts telling you what you should do and what you should not do from a sharing point of view? He is there to help you clarify whether or not your crypto transactions or investments are taxable. Introducing Ross. Now, Ross is an ex-Luno employee, and I personally would consider him as an expert in his field, but he says otherwise.
If I say, very humble.
If you're not trying to get taxed on all of your crypto transactions, all of your crypto profits, then you definitely want to watch this video all the way until the end, because this is a value-packed video. Now, full disclaimer ahead, of course I have to put this out there. Me and Ross were not any kind of financial advisors, we're not accountants ourselves, we're not certified professionals. Everything we do or say in this video are for entertainment and sharing purposes only. So if you need any kind of advice, legal advice, just go and seek an accountant that has an expertise in crypto assets or transactions. Now, is crypto taxable in Malaysia? Of course, as long as it's money, as long as it's profits, LHDN is here knocking on your door trying to be your friend. Unless you're some kind of millionaire on Instagram living in Dubai or any of these countries, then you won't be taxed. But in Malaysia, unfortunately, whenever you have money, LHDN will be there. Di mana ada semut, di mana ada gula. I messed that up. Who cares? Now that you know that our crypto portfolios are subjected to taxes, but what are the criterias of a taxable crypto portfolio? Now, there are 8 requirements you have to possess in your crypto transactions in order to be taxed, and if you don't touch any of these elements of trade or badges of trade, then you will not be taxed on top of your profits.
The motive, the frequency, the length of ownership, how long you own it for.
So the first one is the nature of crypto. In example, quantity. Crypto bought or sold in large quantities could be flagged as possessing elements of trade. Now, the length of ownership. Crypto that are held only for a short period will be more likely regarded as having elements of trade. Frequency of transaction. The more transactions you make in cryptocurrency, the more it looks like an active source of income, the more it is likely to be taxed by LHDN. Supplementary work. Crypto transactions with the following may be treated as possessing elements of trade. Additional work done on crypto to make it more marketable. Extra effort made to attract purchasers. Circumstances of realization. Some circumstances are likely to indicate trading, such as being forced to sell crypto due to urgent need of cash or threat of foreclosure or companies. Motive. Individual's intention when purchasing crypto, such as whether he or she undertook the activities in a business-like manner, in example, developing business plans, advertising digital currency business, and etc. Now, mode of financing. Purchase of crypto that is financed with short-term financing is more indicative of trading than long-term financing. Companies' financial positions and ability to hold on to the crypto will also be considered as trading. Other relevant factors, like whether any feasibility studies were conducted. So here are examples of the transaction that will be considered as trading when it comes to your crypto portfolio. So active trading in crypto. Businesses and individuals that buy and sell digital currencies regularly as a part of their business operation to obtain profit. So whenever you're intentionally trying to generate profits, LHDN would consider that as an active form of income, and that they will want to tax you on top of your profits if you make profits. So crypto mining. A lot of people are, doing illegal crypto mining in Malaysia. I don't know anyone who does that. Batman couldn't squeeze information out of me. I'm Batman! And I really don't know, okay? I really don't know. But for people who are out there watching this video who are mining crypto, you are actually obligated to, pay taxes if you don't already know. So that's why there are a few cases of, people or authorities seizing an entire crypto mining factory in Malaysia. If I'm not mistaken, it was like a few years ago. So if you mine crypto, better pay your taxes so that you can spend your money with a peace of mind. So business transactions conducted in crypto. Very self-explanatory. Whenever you pay for a service or a product with crypto, then that is something that will be taxed as it is considered as a form of payment. Salaries paid and received in crypto. Same thing, whenever you pay something with crypto, the business will have to pay taxes on top of the income received, even if it's in crypto. Crypto conversion, converting one crypto to another crypto. Now, profit to be taxed if the gain is revenue in the nature. Another point that Ross made during the podcast that I would like to highlight, and that is LHDN did not really make a clear black and white on what kind of crypto transactions will be taxable. Yes, there are quite a few elements of trade that LHDN has listed out, but there is still a little bit of gray area here and there when it comes to crypto. But so just like Ross said, which I agree very much with, whenever LHDN were to release an exact black and white statement of what kind of crypto transactions are taxable and what kind of crypto transactions are not taxable, then we as humans would abuse the system. So let's just give it an example of 10 crypto trades a year and you'll be taxable, right? Then everyone would be doing 9 crypto trades a year in huge amount of quantities. So then you will not be taxed. But that's why I believe LHDN is setting a gray area in between, just so that there is a little bit of room for argument for LHDN to try and tax you on your profits. Sadly, this is how Malaysia works. Or on the bright side, you can also argue a little bit with LHDN on the profits that you've made are not considered as trading as well. So it works both ways. It's just a matter of perspective. So how are the taxes in crypto different from other investment taxes or income taxes?
Put it very easily, just take crypto like any other form of money, and it works almost exactly the same way. Let's say you receive a salary in crypto. Your salary will actually be taxable because it is basically you're receiving money, right? LHDN treats crypto and money almost exactly in the same way. Only thing that's not taxable is capital gains tax. So if you buy something and it appreciates in price, let's say after 1 year or whatever, the price goes up, like a stock price or whatever, that is not taxable.
So a lot of wisdom spilled by my Afro bro, but to further back him up, in this article it says, while most crypto transactions are tax-free due to the absence of capital gains taxes, active trading and certain business transactions may attract income taxes. Income tax in Malaysia starts from 3% all the way up until 30%, depending on the taxpayer's bracket. Now, this is what it says so lah. So I assume that you will be paying the percentage on top of your own tax bracket. So the profits that you made, you'll be paying the same percentage as the income bracket that you're in on top of your profits. If you get what I mean, I hope I'm making this clear enough. In short, this will probably be considered as a side income or a side hustle, and it will probably be considered as just like any other forms of income. And you'll be taxed based on your personal tax bracket. Now, it really depends on what kind of organization or entity you're registered as. So, sole proprietor, obviously it is attached to your personal tax bracket. And if it's a Sendirian Berhad or any other business entities in Malaysia, then it'll have a different form of tax structure. So, no, there's not any kind of differences between your crypto profit taxes and other forms of income taxes that you'll already be paying within your own personal tax bracket. Now, this is a very good point made by Ross. He also mentioned something about sole proprietor. He said that you can set up a sole proprietor, and whatever income or an investment that goes into trading crypto or whatever that helps you to generate this form of income, you can actually use that as an expense and to write off taxes.
Let's say you're doing a crypto business. Let's say you're a crypto trader. So you also buy a big computer, all the monitors and all that. So as part of your revenue generation, you need this equipment. So that's your expense, right? So the revenue you earn from crypto trading, you minus your expense, your computer, your whatever you need to do the business. And then the remainder profit is what you pay to your LHDN as taxes, right? In ringgit value.
You can set up a sole proprietor and include the equipments or any kind of investments or expenses that you spend on generating this form of income. So we know that we are subjected to crypto taxes, but how do we file or keep track of every single one of the crypto transactions if you want to file for crypto taxes? Now, Ross has a perfect answer for this.
For people who are traders, for example, on your trading platforms, you will almost always be able to export your trading history as a CSV or Excel file, and you need to keep that, right? Because let's say, for example, while you are trading, you're paying fees, correct? Yeah. All right, so I buy Bitcoin today, I pay a fee to the trading platform. That fee is an expense that I deduct, right? So let's say I made a profit of $100, but my fees was $2. So 100 minus 2, 98. So I'm only paying tax on the 98 profit, right? Because I've removed the fees for expenses. So when it comes to file recording, you need to export all your transaction history month by month and keep that as a record.
Now, in short, Any kind of fees that you've paid while you're trying to trade crypto or while you're trading crypto can be used to write off taxes. So, ladies and gentlemen, I hope that this video has been insightful enough for you to know more about how crypto is taxed in Malaysia, whether or not you're safe from these profit taxes, how you can use this to your advantage to generate more income. Now, speaking of income, I made a video on how Generation Zs and Millennials can generate extra streams of income, and I believe that you will definitely like this video. And if you want to look forward to the full-length podcast episode with Ross, with full of wisdom, we'll be going over about how he got his career in the crypto industry, how he go about to acquire all of these knowledges, and the benefits of working in the crypto industry, all of his experiences. A full podcast length video will be dropping next week. So if you're interested in that, stay tuned, subscribe to this channel, drop a like on this video if you found it insightful, as well as click on the next video right here if you're interested in making more money as a Generation Z and Millennial. With that being said, I hope to see you guys in the next video. Stay safe, invest safe. I'll see you in the next one.
Trying to work towards these blessings, but the devil keep interfering. Everybody go through something.